All right. Good morning, trade pros. Sound check. Sound check on the morning market update. I hope you guys are having a great holiday season so far, or great preparation for the holiday. And today we got an update for you. I'm going to start out with some announcements because I think that's probably the best place to start. Announcing things is always cool at the beginning, right? Nobody wants to wait for announcements. It's the worst. The first announcement is I just got a new iPhone 17, and I want to know if I chose the worst color. What do you guys think? This orange one. You're going to see a lot of it on the back, so I feel like I should have given you an input on that. But I didn't. So here's the announcements. I'll be driving from Florida to Toronto to visit some family in just a couple hours, Saturday morning, I guess. And so this will be the last morning market update, basically. Monday I'll be on the road more than likely still, or finishing up the road trip. But I got to do a morning market. I'll be in the trading room, and I'm doing a workshop, a special workshop to help traders plan out their 2026 year and get ready for a fresh start, get ready for a renewed start, get ready to come back better in 2026 than 2025. And we're going to work on psychology, we're going to work on strategy, and it's going to be a great workshop. And it's going to be accessible to all of our elite members and all members who have previously purchased a course or anything from us. So if that's you, I'll see you there. You should get the invite. You should have already been sent the invite, and you'll get a reminder the day of. All right, it'll be a different link than the trading room, just a heads up. All right, so with that being said, this will be the last morning market update of the year, and I'm going to be back Wednesday, January 7th, because on the 5th I'm flying, and actually, my bad, Tuesday, January 6th. The 5th is my flight home. Tuesday, January 6th, I'm back to work, back to the new year, back to the future, I guess. And I'll be ready to start doing the morning market updates again, which means we're going to take a little break from this, but I think you should take a little break anyways, because it's the holidays, right? This is what the holidays are for, and it's really important that you take some time to reflect and to work on yourself and your craft, but also to spend time enjoying time with family and loved ones. All right, so that's basically it. Oh, if you want to be part of the boot camp, join Elite. Now's a chance to try it out. And you have 14-day money back guarantee. If you really hate it and you hate me that much, you could leave and be here. I love you. It doesn't matter. Whatever's right for you is right for me. It's always been my motto. All right. And also, major breaking news. This is the last time you will see my Disney Christmas sweater for the year. That's probably good news. That's probably good news. All right, so here's the main action. U.S. futures are modestly higher. European markets are kind of flat. Oracle popped a nice 5.7% after it was announced that they're going to have a TikTok deal. I'll talk to you about it in a second. Bank of Japan hiked 25 basis points last night at 9:30 p.m. I'd kind of done this whole preview of how terrible it could be and how volatile. It went up to 0.7% as expected. Highest rate in Japan in 30 years. All right. They hiked it a quarter of a percentage point on a unanimous decision. All right. But government Ueda kept things pretty vague on the future. They didn't really give too much details. It wasn't hawkish. It wasn't like dovish. It was just spot on, just a hike that was expected. It was already priced in at 86%. And so, in a way, it was the masterful move of dancing around future projections and not setting off a liquidity event, all right, or mass liquidation. And the basis of that was there was no change to the ETF flows from Japan. They're still going to buy them and support the market. If that changed, that was a trigger, which said it's lower probability, around 20% probability, but high impact. And so we had to cover it yesterday. So that's gone now. All right, the TikTok details are this. Oracle, Silver Lake, and Abu Dhabi's company MGX will own 45% of TikTok's U.S. entity, newly formed U.S. Nearly 1/3 will be held by ByteDance and the affiliate partners that it has, and it puts them around 20% ownership. So they do get to keep a minority stake in the company from China, but it's a non-controlling minority stake. All right, so TikTok and U.S., interesting things are happening. All right, deal set to close January 22nd, and that's that. All right, it's going to be exciting stuff. That's put Oracle finally, basically what I put in the notes is Oracle finally gets a freaking win. On the economic calendar today, 8:30, we had Feds Williams speak. 10 a.m. we have a barrage of data. We have existing home sales coming out. We have University of Michigan, which is a final or inflation expectation reading, all right, which is very important. Employment trends. And then at 1 p.m., we have Trump's scheduled an economy announcement. No other information than that, and Baker Hughes rig count, all right? And that's that. So we do have a very heavy calendar at top of the hour, all right? Also, in relation to NVIDIA, Trump's launching a multi-agency review of NVIDIA's H200 license to China. So they said they were going to sell them some chips. Now we don't know if that's the case. So NVIDIA's kind of caught in the crossfire as well. So now we have Oracle, NVIDIA, Tech's kind of the one that's in the news this morning. Okay. Now, not much news flow. I'm going to tell you why there's not much news flow. There shouldn't be much news flow. It's time to stop flowing and time to start going away from the market for a little bit. All right. I just coined that. It's probably not that catchy. That's why it hasn't been coined yet. But here's some trading tips for today. Why is today significant, relevant, important? It's quad witch. All right. We have the expiry of index options, futures options. All right. And we also have, believe it or not, there's single stock options and single stock. Well, you believe that one, single stock options. That's 3. And then get this, single stock futures. Yeah, there's futures on single stocks. I know, it's madness. These 4 instruments expired today. It's the last expiry of the year. All right, the big smart money, the money managers have client statements to send out, and it's basically desperation meeting time. They're running out of time to make their year-end adjustments. The market's going to be crazy. All right, derivative expiring. Here's my tips for you. All right, don't fight mechanical flows. These are exactly that. They're mechanical flows. They're not. If you see a level and you say, 68.95 has to hold because I got the triple extension of the IB and the gap projection of the MACD deviation of like the 6 sigma event occurring, all plotted on the one, and it's a great level to short. If I have 4,000 contracts to sell and you think that's a support level because of your MACD, you're going to get run over by my 4,000 contracts. I'm dumping them. I don't care about MACD. I don't care about levels. I care about positioning. And that's what we call mechanical flow. All right. Respect these option wall levels I'm about to give you in a second, because dealers are going to start defending their positions. Dealers are short gamma. Institutions are long gamma and trying to adjust it and gamma hedge. And it's all happening today. And we're going to be here picking up pennies in front of steamrollers. I mean, I don't want to make that announcement yet, but consider trading smaller size. Or if your strategy relies on clean technical setups, if technicals is what you're focused on solely, then stay out of the way entirely. You're not going to have clean technical setups. You're going to have chop, you're going to have rotation, you're going to have noise, you're going to have volatility, you're going to have high volume, you're going to have uncertainty in your levels, you're going to likely have slippage if you're trading the micros at certain points. It's chaos. All right. Watch for false breakouts today if you decide to just ignore my advice, as hedging flows tend to dominate the tape. It's not about directional stuff. It's hedging. Today, the key word is hedge. Hedge and repositioning and positioning and final positioning from institutional money. Right. That's the order of the game today. All right. Post expiry on Monday, we could see a gap as the kind of the effect of the pin, as we call it. The pin effect wears off. You could see some big movements. So over the weekend, if you have some positions that are over leveraged, I don't know, maybe reduce it a little bit, maybe not. Who am I to tell you and give you any advice? Here's some ES adjusted levels, but I'm going to turn around and give you that. How about that? Let's go on the charts, because there's not much news this morning. I tried to scrape, and I scraped and I scraped. Hector, good morning, sir. Good morning, TRADEPRO. Nice. Well done, Hector. Well done. Oh, I just showed you the chat between Erica and myself. And you're probably going to read it later on. You know what? I don't think there's anything bad said here. I said I switched cameras so it doesn't freeze up. And it didn't freeze up. So look who's a smarty pants. All right. So if I can find my mouse cursor, we can get to work. let's talk about the trading plan and just analyze the market for today, all right? Because, look, I think you know where this is going, don't you? You know what I'm going to say. But let's just get to it anyways, and I'll say it. All right, so yesterday's U.S. session, we had a fake sell-off right on the open. So we opened 40 quarter, and I'm a big fan of the story. Oh, wait, I'm also a big fan of showing you the chart where my camera is not hiding behind it. Maybe I'm a bigger fan of that, let's just say. All right, okay, so it's here. All right, so let me just draw it again. All right, so basically what we get an open here at 40 quarter. All right, I'm a big fan of the story that the markets are telling us. So the story is it dumps, it recovers, dumps again, and it rallies all the way up. And their team in the room's on board. And we go and I said, watch the 71 quarter if there's anything you're watching today, because that level was yesterday's prior day high, so 2 days ago. And from here, I'm like, prior day highs have a lot of contracts and unfinished business that they could trade out there. And sure enough, it ended up being literally to the tick, the big reversal. But what's more interesting and fascinating is in this tight consolidation pattern, think about this. After we opened 40 quarter points and we dropped down to the daily session low of, well, no, we didn't drop there by then, but 22 points up until 72. That's a 50-point move. And a 50-point move consolidates in an 8-point range and then spills coming out of there. What happened in there? If you don't want to know what the story is up here, you're missing context in the market. So what happened in this freaking box that led to this happening? It wasn't news. It was order flow. The order flow was everything was going up nice and smooth until 1/600 lot came in at 64 and bought the market in one shot. All right. And then another 800 lot just above it at 69 came in and bought the market in one shot. And I told the team in our room, like, guys, this will be the pause, if not the termination of this bullish trend. I'm out. I'm not looking for any more upside. We've hit our daily resistance, and we have this order flow that there's so many people on the long side. The ship is full. It's got to tip over and let some people out. Did I expect it to drop all the way down to form the daily low? No, I didn't. But that's what happened. I just expected a pullback. But this pulled back really hard, and it went to 68.11, 3/4 on the low print here of the session yesterday. Then we recovered a little bit. We got above the open, but never quite hit the highs. Then we sold off back to the lows, but never quite hit the lows. Then we rallied back up, and then we never quite hit the high below that or the high of the day. Then we sold off a little bit, but never quite hit the low. And then we just closed. We said, you know what? Enough is enough. Forget it. We're going to just close. All right, so the cash close yesterday was 27 quarters. So we closed near the lows. All right, we closed below the open. Let me clean up this chart. And a lot of these levels I want to show you on the update, but I cleaned it up after. So this is the messiest you're seeing my chart. So the prior day cash close is 27 quarter. It's below the open. Okay, it's below the high. It's below yesterday's open. So prices are moving lower, but the thing you should take away yesterday is this consolidation pattern. That this is what you're going to see today. This is just nonsense. Nonsense on the charts, up and then down swings and up swings and down swings. And after the fact, I'm sure you could find 50 reasons why it stopped here the first, second, third, and fourth time. But in real time, it's more difficult to trade than it looks. And I know you know that. All right, so overnight. Let's look at the overnight session. The story in the U.S. was confusion with volatility, massive movements, but net slight decline in price, not much movement or not much gained, not much footing gained for the bulls or the bears. You kind of just close slightly below reopen. It's not a big movement kind of day on a net basis. Overnight, the low was 68.20, just 7.25 points off the prior day cash close. The European session takes us up. We put in an overnight high of 54 quarter. We again can't exceed that high. And here we are just rotating between the prior day cash close and the overnight high. Now, here's the trading plan. All right, be with me here for a second. And just listen to the words, please, and don't judge me. Okay? The overnight high is below the prior day high. Okay? The overnight low is above the prior day low. All right? The price where we are now is not too far off of the previous day cash close. We're trading kind of around yesterday's open, and we're sort of in the middle of all this stuff. And the overnight range is in the middle of yesterday's U.S. session range. It must be quad witch or something. oh wait, it is quad wedge. This is the kind of stuff you're going to get. And why do I say that? It's an inside day so far on the overnight session. It means to bring in and to attract fresh trades at fresh prices, you got to go north of 72 or south of 11, which means you're going to be waiting a long damn time for fresh price, which means you're probably not going to wait that long, and you're going to get into a trade in a beat up territory. Imagine this. You're standing in here. There's footprints of bears in the woods. All the snow is beat down. There's pee from the bears. There's blood everywhere. And you're sitting in the middle of this scene looking around, and you're like, well, which way do I go? That's kind of, it sounds funny and stupid, but that's what's happened. This is like, the ground here has been beat down so much in the same price that it's impossible to decide I'm going to get long off the 36 or I'm going to get short off the 48. The most sensible thing to do is to try to trade the range here and here, to short it on a high and here, and or the breakouts. That's the most sensible thing. But it's quad witch, so even that's not a sensible thing. So today's trading plan is not to trade. Simple as that. I hate to say it. Got to be the guy. Just don't trade. All right? That's probably the best you could do for your account. All right? It's going to be a big day full of the big guys with big orders fighting each other and fighting time before they close today's session. I'm gonna opt out of this and just go play hockey this morning and go travel. And then Monday, I'll be back in the trading room to do not the trade, I'm done for the year, but to do our workshop. And you should definitely be there for the workshop. Check us out at TRADEPRO Academy. Head on over. If you get the lead subscription now, you'll be part of it. And, you get 14-day money back guarantee. So read between the lines if you're not satisfied what you could do. That, ladies and gentlemen, is going to be that. I had some levels for you as well on the call walls. So, right, these levels down, 68.91, which is way up there, is a huge zone that's a natural pin. And on the downside, you have 68.16, the closest one. And in essence, we're kind of trading in between there, right? As you approach 92, you're naturally going to, As you approach 92, you're naturally going to find some dealers selling for gamma. As you approach 60, you'll find some natural buyers. So even the options flow have us pinned in this range. So we're in a pin, and we're probably staying there. This is what I want to tell you, and we'll wrap it up. And we're not only wrapping it up for the day, we're wrapping it up for the year. So this is what I want to tell you. I love you guys. I want to wish you the happiest holiday season to you and your beautiful families and everyone in your circle of friends and people that you love. And I hope you take some time for yourself, because just listening to me every morning drives people mad. You need some time to decompress. We need some time apart from each other to think about the things we've done to one another in 2025. But in all honesty, I appreciate you guys. I came back to TRADEPRO Academy after a 2-year absence. It hasn't been easy. But the glue to me coming back, what solidified it, is missing you. So you're my glue. You're the person that keeps me in this business focused, motivated to deliver high impact stuff for you. And when I think of moments when I'm like creating content, when I'm creating videos, I'm thinking of you. I'm not thinking of how many views is this going to get. In fact, I very rarely check the views until Erica reports at our team meeting. And I'm like, oh, hey, cool. But it's not about views. It's not about likes. It's not about comments. It's about you at the end of the day. And that's what I think about. It's what always on my mind is like, how do we take this business and make it achievable for people who have the passion and drive to succeed? Not for people who just want to get a Lamborghini yesterday. All right. Like, those people are lost souls. If they'll find out the real deal of the business, and then they'll find us eventually, hopefully. But guys, I love you so much. Please be careful. Not be careful, but have a great holiday. Be safe. That's the word I was looking for. And take care of yourselves. I'm going to see you next year. 2025 is over as far as market update goes, but I'll see you next year. And check me out on x.com, formerly Twitter, where I tweet, or wait, do I X? I don't know. Where I X tweets or tweet, whatever. Like George Papazov. It's in the little title bar below. Follow me there. I'll be tweeting a little bit more throughout the next couple of days of the market with some updates. I'm going to go light there too. I love you so much. Merry Christmas. Happy holidays. Happy New Year. Happy Hanukkah. Happy whatever you're celebrating. I love it. And I wish I could be at the table with you and the family for the holidays to celebrate together. From Mickey and myself and TRADEPRO and the entire team, sayonara. I love you. what a great 2025 it's been. And wait till you see what's coming in 2026. Bye, guys.